Hi traders, and welcome to the technical analysis market wrap on Friday the 11th of February. So we've seen some, bit of a pullback really over the last 24 hours or so. We saw some good movements on a lot of the currency pairs and indices earlier this week, but we've certainly seen a big retrace on the technicals now. So we'll jump straight into the charts and see what we can identify for today's trading and early into next week. All right, so the Aussie USD here is our favorite starting point, and we know here that we've got effectively a very, very big rejection candle on the 50, just pretty much where we expected. Although we saw a really, really big move, it did break through the 50 moving average here. We got the lightning bolt that we were looking for, but yeah, as we were well aware, we have got resistance right in front of it. And when you've got that sort of resistance, you've got to be very, very mindful that the candle has to actually close above it prior to getting involved in actually that run that you're looking for. So as you can see, this has been a really, really big move up. It basically got to the 72 sort of 45-ish area, but a very, very big pullback. That's a pretty serious pullback, really. You're talking about 50 or 60 pips. And if the candle ends up closing there, which is likely to underneath the 50, it certainly takes away a lot of the momentum and speed out of what was going to be a very easy run up to the 72.90. I can't stress enough that you must let the candles close. I mean, if you had have seen this candle several hours ago, you would have seen a big, big green long candle thinking, wow, this is going to the moon. But it's the close is so important, especially on these daily candles where the market gets a chance to absorb all of the world moves. And as you can see here, it's had a very, very big pullback, which actually puts it in a very awkward position for next week because it's showing a very, very big sign of weakness. You can see the wicks like this are quite rare, especially as a reversal. And when they do happen, it generally doesn't bode well for the next few days of trading. As you can see here, the last one we saw was actually at this point here, which is nearly the same point. The 50 moving average again pulled it in on the daily. And as you can see, after that, it was basically a week and a half of sustained selling. So very bearish sign in terms of the short-term movement for the Aussie. It can be a very, very different candle, like I say, when it doesn't get that rejection. But because it did, and it's pulled itself underneath the 50, we would be looking for shorting opportunities now. We go down to the smaller time frames, of course, to try and isolate those. As you can see, the 4 hour doesn't tell us a lot because it really happened in the last 4 hours. But the 1 hour is a sustained sell-off of about 6 candles in a row. What you want to be doing now is just effectively waiting for it. We've still got a support zone at this level here. As you can see, the 71.40 level is still a pretty strong support zone. We need to break that before we start looking for serious shorts, okay? So realistically, keep an eye on what's happening with it. If we get a close below the 71.40, we're going to start targeting that 70 area again. And I think the 70-cent mark is a pretty logical target for this one. So what we want to be doing, though, is waiting for that lightning bolt. We always seem to be waiting on these on a Friday, don't we? But look, at the same time, it keeps you out of trouble. If you had tried to go long up there, you basically would have been whitewashed and the trades out. So this is why we always wait for the closes, and then that gives us all the information we need. This particular candle is telling us a lot about the momentum of the Aussie, and we're going to play on that. Failing that, the only thing that would convince us otherwise is now it's got a lot of work to do to go long. It's got to basically close above this level. I wouldn't even consider taking this long until this level here is broken now with a solid candle. And the problem with that, of course, is that we've got a very small range up until the 72.90, which is the next serious resistance point. So it makes it a difficult trade on the long side to really pick up that momentum, but the short side is a little bit different. So you can play both ways, but one is certainly better than the other. And in my mind, if we get a break below the 71.40 here and we get a close, then we know that we've got momentum back on our side and we're starting to get the short term kicking in and looking down for that 70 again. So that's my thoughts on the Aussie. Good trading on the short side, limited potential on the upside, mainly because now it's got a lot of work to do to get back into the position that you wouldn't think it's going to fail there again. So we'll see how this one goes. All right, let's move over to the US dollar CAD now. This one here is, another one that's really sustained that move up. We had a bit of a flat week, really. Nothing to write home about. It's not like we had big movement, but what we know for sure is that the 20 and the 50 certainly held up on the daily chart. Those moving averages formed a very, very good base. And although it did try to break it down to the lower side, it certainly picked up and turned around. Now, obviously, the dollar strength has had a bit to do with that, but at the same time, this was a strong base on it in its own right anyway. So I'm pretty happy with where the CAD's at actually, but we've got to break this particular zone, which is the first real resistance. That's at around that 128 area. You got to go to a smaller time frame to see if you can identify a reasonable move up. That sort of pattern is hard to trade because we've had a good sell-off and a big reversal without any clear-cut pattern to pull back to. So it does make it quite a difficult trade. The only, if you're already in this off the base, you've certainly got a good opportunity and you couldn't have stayed in, and then you'd be looking for here. The only, you've got about 60 or 70 pips to the next resistance. So the only thing I would be doing here is potentially looking for a bit of a pullback. I wouldn't mind seeing a bit of a pullback back to this level here, which is around that sort of low 127s, maybe a 15-20 pip pullback. Give the MAs a chance to reset on the smaller time frames as well, and then look for a bit of a lightning bolt on the smaller time frame up. So you can go down to a 15. So yeah, we've got one big move. It's just been relentless, and that's difficult just to jump into. But if we get a pullback down to around that 127, the 20 moving average will catch up, and that'll give us a good reload zone to actually get into what looks like a move up to the 128. I think that's the positive move, 128 to 128.50 at its stretch. But I think the easy trade will be a pullback down to the 20 and then off to the previous highs here, as you can see, at around that 128. All right, so bit of a scalp on this one. You can see all of that resistance right through there. So on the short side, nothing's going to make me go short on this until we get a daily close below these moving averages. I've been saying that for a week and a half, and that's certainly not about to change now. We get a daily close below these moving averages, then we start targeting this area down here to around that 125.30, but nothing short of that will make that happen. So we want to be looking for that particular sign, but the upside looks more likely at this stage. All right, US dollar yen. This one is finally reached that high. We knew we had strength, like we were obviously going on the lightning bolt move. Once we broke past this level here, it was going to always test this higher level. It's already done that now. So I know a lot of people got into this trade. I got the email saying that they showed me their entries, which is actually good. I saw 3 of them that saw the mini lightning bolts, which is awesome. So it shows that people are really taking on board what we're seeing here on these Friday wraps. Good trading, and obviously you've hit your target now. It's not that it can't go higher. I mean, it certainly can. But realistically, that's the first real zone that you're going to take. Once it hits that level there, you know that you've got resistance right in front of you. So realistically, though, if it pulls back a bit, and even if it comes back down to this level here, this would be the ideal pullback zone around that 115.50, so about 60 pips from here. If it pulls back to there and starts to show a little bit of strength on the smaller time frames again, I'd be inclined to go long again to the previous high, and then maybe that might be the one that breaks. I could certainly see it breaking. It's not like it's going to hold it forever. But when you're only scalping, that's going to be your first target, right? It's the easy money. It's the place where it's most likely to turn around. And it's certainly the most important pressure point before it actually either turns around or breaks through. So I don't really like to leave money on the table when something's at risk, and that's the at-risk point. So I know everyone's out now, or everyone should be out of this trade. But if you want a re-entry, look for the pullback down to the roll reversal zone, which is right here at around that 115.50. If we get that, then we can look for potential reversals. The short side is a tough one on this one. You've got an obvious target of 114 if it does roll over from this point here, and you'd have to go to the smaller time frames to actually make that happen. You go to the, basically the 1 hour is probably sufficient here. Look for a change of trend, roll reversal at the roll reversal zone. Lightning bolt on the way down, lower highs, lower lows, and then we can start looking at shorting down to the 114. But that's not the preferred trade because it looks like the momentum at the moment is with the long. And although the MACD is starting to fade power-wise, that's more of a consequence of a bit of a sideways movement right throughout this period since August of last year, really. Like, we haven't seen really big explosive range, and the moving averages have been converging on each other. So that's why our MACD is dropping. So, we know we're at an important zone. So realistically, just play what the price action says, and we should be all good with that one. All right, dollar index. Dollar index is doing its job. It's holding up at the level that we want it to. Big, doji candle here. You can see, it was looking really ugly there for a while, but it's pulled up to about the middle of the trading range. Pulling up underneath the 50 though, to me it's still stuck in this little range. Obviously the 50 and the 95.25 area are holding it and really binding it to not actually get a result. Until it does that, nothing changes here, okay? A close above the 20 and 50 moving average is a very bullish sign for this, and if it does that in this week's trading, it's going to be a pretty strong sign for next week, and a close below the 95.20 is going to potentially put pressure on it all the way down to about the 94.50 area, which is the next support zone. So not a lot to report, really. It's kind of, look, it looks better than it did last week, no question about that, but we've seen a lot of range in this last period on the daily candle. It's a big daily range, and generally speaking, when it touches a low and it's still caught within that range, there's nothing doing until we get a close either side. So really just monitor that one and trade whichever way it breaks. I'm not fussed either side. I think that the up and the down are just as good, which of course leads us onto the euro. The exact same thing. As you can see here, we've got that resistance right in front of us. It tried to push it, but of course it closed. You can see this is a very clear doji now, big rejection doji. Still an indecision candle, no doubt, but realistically, whatever the dollar index does, this is going to do the opposite, and you're not going to be trading this until we get a break of the 113.50 area to the short, because that'll mean it's got very strong support here, right? It's got moving averages, both of them, the 20 and the 50 on the daily, and it's a very strong roll reversal zone as well. So, and we've got resistance at that 114.70 area. So realistically, it's caught in the zone. If you want to go to the really small time frames and trade inside that band, that's perfectly fine. You could get some decent pips because the range is big enough to actually do that. But you're not going to get any sustained moves until one of these breaks. And either way, I'm not really fussed. The upside is just as good as the downside, because I think there's enough movement and range to get us some pretty good results. But if you want to go to the smaller time frames and trade inside these bands, you can see the bands here. We're right in the middle at the moment. Difficult to pick a direction because we're not getting very clear defined higher high and higher lows. But if we get up here on a 15-minute chart, you could look at potentially selling down if we get a rollover, and same on the bottom side. If we get down to here, we can look for a little mini bottom or a candle reversal and push up to the middle zone or up to the top. So you can trade that channel on the smaller time frame if you want to scalp it. But for mine, the long sustained move needs to break above or below these key horizontal lines. All right, the last one we'll have a look at is the S&P 500, because that's the one that everyone's interested in. You can see here that we've got big rejection today. Obviously, the news wasn't as great as they would like, which is okay. Look, at the moment, it's hard to read which way the market will react to whatever the news comes out as, to be honest. So realistically, we'll just let it reset. It's had a pretty good couple of days. As you can see, it's been trying to push up past this level. This level here is proving to be quite strong now, that 45.90 to 4600 level. You can see here it was pretty strong support here, rejected quite heavily at this level there, and good interaction through here as well. So now this is the break. Look, it was about to do a lightning bolt. Had it broken through here, it was looking really good and long to about 4800 in the new highs again, but obviously it didn't do that, and it's failed quite significantly. Actually, it's a pretty big rejection candle at the 50 moving average as well. So it's failed to do the lightning bolt, as you can see. What we can probably look for now and expect is that it will find support around this level here. You can see that it's a bit of a changeover. You got the 200 moving average, big rejections throughout here, and you can see also through here that it was actually a point of resistance as well. So realistically, if it turns around from this point onwards, you got MACD power. There's no worries there. So there's certainly enough definition and separation in the MACD and the moving averages that actually make that work. So that's okay. And they're about to effectively cross the 12 and the 26. We know is about to cross. So that's going to give it a little bit more power, but in saying that, it's got to turn around in a smaller time frame. So we draw a horizontal line at the level where we expect to find the support. We go down to the 1 hour or the 4 hour, and we look for a reversal around these levels. Okay, a change of trend, higher high, higher low on a 1 hour or a 4 hour, and we start targeting these highs again. So you're going to get a pretty good base at this level. It's around the 44.50 mark. Anything around here that reverses the market, we're going to start aiming for that 45.50 to 4600 zone again for the pull up. Okay, but it's going to have to do that. I wouldn't trade this until I actually get that confirmation. I want to see the change of trend. Without the change of trend, I'm not going to get involved in this one, because I think there's a little bit of uncertainty. On the short side, of course, if we break through this support zone and we break past the 200 moving average, a daily close below here and we would be looking for the new lows again. It's not going to stop anywhere in between, I wouldn't imagine. So if we get a sell-off that warrants a close below the 200 and below the 44.60, I would be starting to target this next support level that reached not that long ago at around the 4,300, which is pretty good trading range. I think both of them are good trades. I'm not really fussed either side, as long as it does something. So we need a break above here, close, or a break below here, close, and you can trade either direction quite easily. But I think the scalp in between is going to be a little bit volatile and hard on this one, so you just want to be a little bit careful on the scalp. All right, so I hope everyone's had a great week's trading. We've had some really good movements. There have been some good opportunities, but I think we are tracking for a pretty good week next week. It looks like there's some key levels that are going to be tested probably in the next 24 hours, and if we break through them, it should start some intermediate sort of trends for next week that'll get us involved in some good scalping and swing trading. Have a great weekend, everyone. I look forward to seeing you all next week.